Eric Mother.com. In response to your question, I'm going to take a look at the buy point I issued yesterday for CYBR. In fact, I've been recommending the stock for a while. And the reason why I gave the alert is because it moved above this monthly closing high. Previously I was at 59.37. That's a 5. And this is the previous monthly closing high. So obviously, based on our work, we start with the monthly, and the monthly did give us a nice entry there, which is why I sent that alert. So as long as the stock is holding above that, I think it's a good one to watch for higher prices. Your question was, why did I choose that buy point? And right there I've explained why, because that was the previous highest monthly closing high, similar to this buy point here, which we also did go long at this point when the market moved above that prior monthly closing high. This was a good buy signal for us back about 3 months ago. So now we are using the same analysis to go along. Remember, we want to start with the monthly chart. If we can't find a buy point on the monthly, we go to the weekly. If we can't find one there, we go to the daily. So that's been the series in this couple of videos. And so if we take a look at the weekly, we can see clearly here that if you want to wait for the weekly breakout, you're going to have to wait for this breakout to take place above the current all-time weekly closing high of 70.35. Clearly, you don't want to wait until that level. If the stock is going to get there, why don't we use the monthly? That's why I say you start with the monthly, work your way to the weekly looking for entry level, and then work your way, if you don't find an entry on the weekly, to your daily. And for an IPO, you can actually even go to the hourly if you want to time that. If we don't have any entry on the bigger time frame, you keep going to the next time frame or the next smaller time frame. So instead of waiting for this to be a trigger point at 70.35, the monthly gives you a better entry point. Now keep in mind that this is the weekly. Most people don't even consider the weekly. In fact, when I came into this business, I was taught earlier on when I started this that you want to wait for the intraday breakout. So previously this would have been the high. So most people will actually wait for the intraday high before going long, and that's okay. That's another method of playing this. But I think the entry points we are discussing here give you a better idea and a better lower entry point for the stocks that we are following. Take in mind, for example, a stock like FYEY, which is in the same space as CYBR. You can see here, if we go to our monthly, that previously there was a nice monthly breakout here after 2 months of rest. 2 months of rest, which is this month of rest was 1 month, and then month number 2 of rest, and then the stock broke out above the prior monthly closing high. So there's a nice breakout here, which took the stock as an IPO from about 43 all the way to about 96. That's a big move. That's a big move. So now we are playing the same thing. The difference is that now we have a mature monthly chart. I say mature, why? Because we have the MAC RSI now fully developed, and the RSI on the monthly is just about to make all-time highs. That's why you want to be looking for the sweet spot. All-time highs are the best. And we also see that one of the MACDs is now fully developed for this IPO. It is breaking out to all-time highs and also moving above zero for the first time ever. So that is a lot of strength behind this stock. All it needs to do now is hold above the price point that I'm going to discuss next. As you can see, this is the most recent monthly closing high. And so we are going to use that because in this series we've been talking about finding any excuse to go long a stock. And the excuse here is that, and it is a good one, it is a very valid one, we are breaking out on the RSI to to all-time highs, and the MACDs are also doing the same thing, breaking out to all-time highs and above zero. So that's the excuse, that's the reason. So we can use this monthly closing high recently of, let's see here whether I got it right here, 44.27. So if it can hold above that, then it's breaking out. So you want to buy that breakout on the monthly, ask questions later. Now, if we take a look at, for example, the weekly, the next level down, or the next smaller time frame, we can see that the weekly has a higher buy point, which is the recent weekly closing high. So if you miss the monthly right now, which is hasn't moved above, it's currently trading at 43.79, it needs to be above 44.27 on the monthly to break out. If you want to wait for the weekly breakout, you're going to have to wait until it moves above 46.15. That's about 2 points high. So the monthly gives you an earlier entry point. If you wait for the daily, as most traders do, then you can use this previous daily closing high there, which also happens to be at 46.15. So that would be the next daily breakout. My suggestion in all this series is you want to start with the best entry if you can find it, which is here on the monthly. The monthly right now is giving you a good trigger, so you just set the alert at 44.27. The stock did trade above that earlier this morning, but it's moved back below. So you wait for it next time. Since it's not above 44.27, you don't buy it. You buy it on the day, on the hour, on the minute. You see it moving above 44.27. In fact, if you really want to be playing the momentum, then since this is the high for the day, and it's at the high for the day today is 44.48, and it has stalled since then. It's below our buy point. What you can do is wait for it to move above 44.48. In other words, you can set an alert at 44.49 or even 44.81. If it breaks out above this level, then it is suggesting that it's taken out the recent today's intraday high, and could also be confirming that it is now seriously intending on moving above this level. So sometimes you can tweak these things a little bit. What I would do for today, because I've seen the stock move to 44.48 and stall, just for today, if I want to buy it today, I would wait for it to move above this 44.48, because if it has already stalled at this level today, I would like you to take out that. Yes, I would be buying it higher. I would be buying it above our 44.27 ideal buy point, which is this monthly closing high, but that's okay. I just want momentum, and if it can take out this intraday high for today, I'll feel more comfortable knowing that it has at least surpassed its most recent intraday resistance. Otherwise, right now it is trading at 43.86, so don't buy it, or don't buy until you see the next attempt and the next move above 44.27. I hope that makes sense. One of the reasons why I am favoring this group is, number one, take a look at the S&P 500 as an example. S&P 500 has yet to break out on its weekly price range there. So S&P 500 has yet to break out. We take a look at the monthly. We can see that on the monthly, the S&P 500 is doing its best to break out on the monthly, slightly trading around that level. But while the S&P 500 is struggling, if I take a look at the ETF that tracks the cyberspace, you can see that on the weekly it's breaking out, but on the monthly it broke out a few points below, or a few points before, at about 29.30. So the monthly, this one is breaking out. So by leadership, you want to go with the instruments, especially the ETFs, especially the sectors that are already breaking out. And sometimes some of these sectors are just what we call a theme. They are not your traditional sector. In other words, most sectors will have handful of stocks, maybe hundreds of stocks, but some themes will have maybe 5 stocks or so. So this is a theme, and the theme is cybersecurity, which has been doing well. As an example of this theme, take a look at, I think it's Palo Alto, and ticker symbol. Let me try and see what the ticker symbol. And here's one of the leadership stocks in the sector, PANW. And if you can take a look at how this stock has performed over the last couple of years on the monthly, right there, oops, I guess that doesn't give us a good view. Let's go to 3 years on the monthly. And you can see that the stock has jumped from the lows here of about $40, now at $150 since end of 2013, with many breakout levels. I mean, you can see there was a breakout level. Let's go to when we can see breakout level here, many entry levels. So the stock has been giving investors many reasons to go long. Another breakout here on the monthly. There was another breakout after 1 month of rest, which is the minimum on the monthly. Again, another entry level there. And recently, another breakout, after 1 month of rest. So the idea here is that this is an ideal chart where we are seeing the monthly breakout take place, the stock doesn't look back. So this is the leadership sector in the market. It's been trading well. RSI continues trading above 69.10, 69.1, very strong. And we can see that if we take a look at the MACDs and the RSI in terms of confirmation of momentum, you can see that this breakout here, let me draw that correctly. So this breakout here with the RSI moving to 3-year highs coincided with the MACDs also breaking out here for a nice entry, which was this price breakout. And that breakout was about, let's call it at about $70 roughly. Okay, so, and even if you go to this prior breakout on the monthly, because this chart has many breakouts, good stocks will give you multiple entry levels. So there was a breakout here. That breakout took place while the RSI was breaking out and trending to all-time highs. We can also see that at that time the MACD was also making an all-time high move, and the MACD was also moving above zero for the first time. So this stock was also a buy in terms of the ultimate more, the breakout here below $50. Okay, so that's why I like the group. I like the group because the ETF itself, recently introduced ETF, is breaking out while the market, that's the wrong ticker. So the ETF itself is breaking out while the general market is not. So leadership can be seen by the fact that this has figured out a way to make new highs while the market has not recorded new highs. That's why it's leadership. So this ETF gave you a nice breakout, suggesting that the theme, cybersecurity theme, is hot. Remember, when you are trading in the stock market, don't look for stocks to own. Look for themes. This is what you're looking for. You're looking for a theme or themes to own. And then you can find stocks within that theme. And that's how you do it. If somebody says, what are you owning? What are you looking to buy right now? Do not spend too much time on the stock. Yes, you can talk about the stock. Of course, you're free to do whatever you want. But this is limiting. If you are looking for stocks to own, you miss out on the momentum moving themes. Okay, sometimes it's a small group of stocks that it's not even a sector. Yes, you are looking for a sector, absolutely. You want to own a sector that is doing well and own the best stocks within that sector. But if you can't find a sector, sometimes it's going to be a theme. Hope that makes sense. So themes are also legit. So this one is breaking out. It's a leadership theme. Why? Because you can see here that on the weekly it is breaking out. Has been this week it's breaking out. So it's leadership. The market has yet to break out. This one has broken out. So that's why you saw me send that alert yesterday for CYBR, because it's in the right theme. This theme has already broken out. The general market has yet to follow through with its breakout. So always go for leadership. As an example, let me show you something really interesting here. It's just one stock, but I want to take you back to Netflix in 2009. So 2009, in fact, let me go back to that precisely. But what I'm going to show you here is that in 2009, while the general market was making all-time highs, Netflix was very close to breaking out. So in 2009, the general market was trading at fresh lows, or somewhere here in March. But Netflix was about to break out. It was leadership. And as Netflix was holding up well, the market was making fresh multi-year lows. The moment the market found some stability in March of 2009, Netflix was one of the first stocks to break out. Because of that relative stability, relative strength, it moved from about 30 something, I believe in the 40s, all the way to $300 in about 2 years. So I'm going to take you to this time frame here and show you what I'm talking about. So okay, this is a chart for Netflix, and it is for May of 2009. So this is why I say always go for leadership. Always go for leadership. Leadership will always put you in the best light. So in May of 2009, now this is Netflix. Look at where Netflix is trading March of 2009. So this is March of 2009. It was breaking out. So Netflix on a monthly chart was breaking out. In fact, the monthly breakout now here took place at $35 right there. And that breakout did take place in January of 2009. Now, just to show you what was going on in the general market, take a look at the S&P 500 in the same time period. So S&P 500 was trading here. In fact, the S&P 500 was breaking down at the beginning of 2009 to fresh monthly lows after 1 month of rest. It started a new leg down. So while the S&P 500 was pressing lower, Netflix was making new highs in January of 2009. So Netflix was definitely leadership. And if you were watching something like that, you knew that that was the space you had to go in. So buying Netflix due to this leadership made sense. And you can see after that, if we go back and change the time, go back about 2011, 2 years later, see what we get here. You can see that Netflix now had gone on from breaking out here at about $35 beginning of 2009 all the way to trade as high as 300 in about, let's call it 2.5 years. That's a big move. You are talking about what, a 1,000% gain in a stock. Why was it so powerful? Because as the market recovered later on in March here, the stock was already at new highs, and that's leadership for you. So that's why I say you're better off spending more time looking for the best sectors. You're better off finding themes that are outperforming the market before you go looking for individual stock names. So let's go back to your CYBR question, because you asked the question of, once you figured out that the monthly is giving you the best entry level here, do you use the 5% window rule? So 5% window rule. And remember, the buy point on CYBR here, the ideal buy point is 59.27. So 5% above that would be the window, the ideal window to own the stock, which should be somewhere around there. And that would mean that based on the 5% window, your maximum entry based on this would be 62, which is 5% above this price, 62.23. Just a rough estimate. So 5% window would be that range. Now, and I did explain to you by email that you don't necessarily have to use this as a hard rule. This is just for guidance, so we don't chase stocks. And my reasoning was that if this stock is going to go and trade at $100, let's just say as an example, if it's going to go as high as $100 or $90 or $80, does it make a difference if you buy it at 61, 62 or 63? No. This 5% window is always just a guidance, so we don't chase stocks. Okay, so let's just keep that in mind. Yes, you want to buy within the 5% window of your ideal entry level there. But if you miss it, you can always buy at 6%, 7% is okay. And the reason being that, and I mentioned this in my email response, that on this particular example, this is the weekly buy point. So the weekly buy point is at 70.35. So 70.35 is the weekly previous all-time weekly or current all-time weekly closing high. So for you to wait for the breakout, you have to wait for it to break out above that. So which means that all this is buy point range, generally speaking. All right, even somebody who buys it at 71 after this breakout and the stock goes to 100, they don't care. That's a 30% return for them. So yes, the 5% window we use for guidance, but we should not be necessarily limited by this suggestion. So 5%, yes, but we should not be limited by that suggestion. And again, you had a good question on, once you figure out, you are asking about CYBR, once you figure out your ideal monthly buy point, do you have to go and consider the other time frames? Do you have to consider, for example, the weekly chart right there? Do you have, for example, to consider also the daily chart before you buy? Do you have also to consider the hourly chart before you buy? Do you have to consider the minute chart just before you buy? And I say not necessarily, and I'll tell you why. Because we are using the monthly chart to buy, because we are not day trading, we can use the monthly buy point. Once we get our entry, we assume that everything else is going to play out over a period of weeks, a period of months. Remember, if you are using the monthly chart for your buy point, you are looking to own the stock for months. If you are using the weekly chart as your chart and your default chart for a buy signal, then you're going to own the stock for weeks. If you are using a day or a day-to-day daily chart, then you're going to use a daily holding period for your guidance on how long to own. If you are using hourly charts, then you're going to be owning the security for hours. If you are using the minute chart, then you're definitely going to be owning the security for minutes, because every window, every time frame gives you a window of opportunity to analyze what could happen in terms of potential within the time frame. So since we are using the monthly chart here, then the other time frames are not as important. Yes, they're important, but they're not as important. But I would like to go ahead and address your question. And this is probably something we'll cover later on. But yes, it is always good to take a look at the daily. Keep in mind that even before the monthly breakout, I had already seen that this was, the support had already taken place. Remember, the stock broke out here from a primary trend line break. And this series has also talked about the primary trend line. This primary trend line, because at the time this was the highest daily closing high. So this is a primary trend line. Once you broke out there, that was a good entry, and we can see that the RSI started moving during this RSI primary trend line break. So if we draw a simple line from there like that, we can see that the stock did come close to that line and found support. So I've been talking that this stock was a buy. Remember, we went long somewhere here back in the day, and I was calling this a buy zone, and we did talk about this the last couple of weeks, that this was where you wanted to go back into the stock. And even now that it is moving above that recent buy point of about 56.27, that is another buy signal. So there have been many reasons to go along this stock over the last couple of months, the most recent one being yesterday's breakout. But what I want to address here is, yes, you can always look at the smaller time frame to perfectly time your entry. One of the reasons why I gave yesterday's alert is right there, because the stock had rested for 2 days. And let me go show you a smaller time frame. So let's go to the 6 months. Let's go to 6 months daily. And you can see that yesterday when I sent the alert, I had noticed on the daily chart that the stock had rested for 2 days and was about to start moving again. So that was also another reason why I sent the alert there, because of the 2 days rest period requirement. I also did see that the RSI was breaking out yesterday, or attempting to break out again right there. Remember, all these are primary trend lines. Primary trend line because it connects to all-time highs. So you can use even the smaller time frame for more reason to go along. Primary trend line because you're connecting to the all-time high. And even right now, another primary trend line break because you are connecting to the all-time high. So all-time high gives you trend lines, primary trend line break. So all these recent breakouts have been good entry levels because of the primary trend line break there, primary trend line break here, primary trend line break there, and also the RSI primary trend line break right there. So you can go to smaller time frames. So on the daily, I saw these 2 days of rest and yesterday's breakout, which even made it more timely. Okay, hope that makes sense. Now, if we go to the hourly, that's the daily, let's go to the hourly. I did not consider the hourly, honestly, because I'd seen that the hourly had already broken out during this breakout. Or we can say somewhere there. There was already an hourly breakout earlier here. But I did not consider the hourly, to be honest with you, when I made that alert. I can see right now that there is a reason for the stock to stall short term, because it's making higher highs. The RSI is not improving. So to be honest, I did not consider the hourly on this one. Can you consider hourlies? Yes, you can. But if you are using the monthly for your buy signal, the smaller and smaller and smaller time frames become less of a factor. The reasoning is that you assume the stock will take care of those time frames because the monthly is more powerful. Now, I need to stress something here, because sometimes I might forget to discuss something, and it's important. The monthly charts are more important than the weekly charts, which are more important than the daily charts, which are more important than the hourly charts, which are more important than your minute charts. And you can see what I'm getting at here. The bigger time frame always wins, and that's just generally speaking. So if you are using the biggest time frame for your buy signal, all these are going to be of less importance. Yes, they're important, but less important. The key for CYBR, the key is that as long as your stock is holding above your monthly buy point, as long as it is holding above that monthly buy point, you have no reason to be concerned. It is only when it breaks back below this previous monthly closing high that you become concerned. So that's the key. The key is, as long as the breakout is intact, as long as the breakout is in play, you should not worry about what the other time frames are doing, because in time the market will resolve those short-term sell signals. Now let's take a look at the minute chart here, just for the sake of understanding this. On the minute chart, and I'll discuss this at some point, is whenever you are buying during the day, you are better off buying the daily pullback. I hope that makes sense. Instead of buying right now during the RSI highs of the minute chart, you're better off buying it at the pullback. And as an example, I'll show you what I mean. You can see that there was this move. So yesterday, there was a move yesterday here. So this is yesterday's move. right there. That encompasses yesterday's move when I sent the alert. You're better off buying when the stock comes to test the 50 level here. So once it tests the 50 on a 5-minute chart, then you can use that pullback for entry. So yesterday it came back to the 50 here, came back to the 50s here, and even at the close of the day came back to the 50 level on the 5-minute time frame here. So you can use the 5-minute for the stock to give you an entry level, which also corresponds with, I don't want to confuse you, but there's a breakout somewhere here, and I'll extend it that way. So don't get confused. We'll cover this. So let me show you what I'm talking about. You can use the 5-minute to perfectly time your entry. You see this line connecting these highs here, here, and here. Once the stock broke out right there, which was this entry level, the stock hasn't looked back. So what you do is you extend this line like that. That line extension, once the stock comes and holds that line extension, so you went above the line, came back and touched it there. So let me draw this so I can explain this. So it looks like this, and we have this level here is that point, this level here is this point, this level here is this point. The stock comes and finally breaks out, which is this point. And now what I'm saying is every time it comes back and finds successful support here and starts moving higher, so this point is this point here, you go long. So you buy that bounce. It did come back again, did this and went higher, so you buy this period here, which is this lows. So this low, which is this low, was here, and then this lows was during this period here, or similar to this period here. Hope that makes sense. So I'll draw that again and explain that quickly. So you break out, extend the line, and you see support here is where you want to go long intraday, which is this lows, and again support at the back test of that line here, so there, which was this lows. That is also similar to the 50, and I'll show you why the 50. So you have to understand the uniformity principle for you to use this method, and I'll explain that as we go along this mentorship one-on-one coaching program. So this breakout can also yield a straight line, which is what I drew around the 50. And so every time you come to the 50 and hold, you buy, which is there, intraday pullback. Even though you're using the monthly, you can use the smaller time frame to perfectly time your entry. Intraday pullback there, and again support at the 50, which was this intraday pullback, and guess what? It opens today with a gap up. So there you have it. So yes, you can consider smaller time frames, you can consider bigger time frames, but you also want to play around with all these time frames as you buy, at the very day you buy, at the very moment you buy. So at the very moment, and this is key, the moment of your purchase, you have to consider the 5-minute chart. And I'll cover this down the road if I don't remind me. The moment you're looking to buy, you might want to consider where the RSI on the 5-minute chart is trading. Okay, consider that, because it might give you a good entry on a pullback intraday. Why would you want to buy it here yesterday when you could have bought it here at the lows of the afternoon when the RSI came back to the 50? So we need to understand that. So to answer your question, yes, you don't need to care about the smaller time frames, but once you mature and once you understand these time frames, at the moment you're about to buy, you can consider the smaller time frames. So you can perfectly time your entry, and because you are buying at the lows of the day or at the lows of the support on the RSI here and here, you give yourself a better chance not to be stopped out at 5% or at the maximum 8%. So by timing it intraday, you also improve your chances of not being stopped out. So yes, the monthly is key on this particular trade that we are discussing. You don't have to consider other time frames, but at the moment of looking to buy, it makes sense to consider the 5-minute window. So you can buy it during the intraday pullback. So before I conclude here, just one couple of points here to wrap this up is you had asked a question about big charts right there. So big charts as a way of finding the best performing sectors in the market. And it's a good question, so I would like to address it. Is you asked what time period. So here we are looking at the best performing sectors over the last 3 months. That's one option. But I would say, yes, you can consider any of this. Either the 3 months is okay, 6 months is even better. I would say 6 months is probably your ideal. So if you are to pin me to one of the time frames, you want to find the best performing sectors over the last 6 months. 3 months is okay. You can also at least make sure you know what is the best performing sector over the last 1 year, because you'll be surprised that they keep producing. Now, just to tie all this down, this is the best performing sectors on the market in the last 1 year. Guess what is missing here? Cyber security. Cyber security is not a sector, it's a theme. So again, I go back to what I was talking about. We need to know what are the hot themes, because some of these themes are not shown by sectors. You can see here there is no sector that you can call is cyber security on these sectors here on the 1 year time frame. We go to the 6 months view, and again you're going to be hard pressed to find cyber security here on these top performing sectors. It's not there. You go to the 3 month best performing sectors in the market over the last 3 months, again there is no cyber security. So cyber security is definitely, as you can see, a theme. It's not going to be one of your major sectors. So the work we do to find stocks can actually be shifted to finding the best hidden themes in the market. And some of these themes are not obvious when you look at your generic sectors. Now this is one view, and I'll have the links to in the description. So big chart is one view. Let me show you another one, which is bar chart. So give me a second here. But before I do, just a quick reminder. So once you find the sectors that are doing well, for example, here we are looking at, let's go to the 6 months, which I said was 6 months view. Make sure I have everything showing up here. All right, so 6 months view here. All right, let's make sure we get that focus pretty good there. All right, so what you do is you go within these sectors and find the best charts within these sectors. So once you find the sector, go within the sector to find the best stocks. That's how you're gonna own the next powerful moving stocks in the market. Now, I was showing you that there's another, and I'll have the link in the description. Bar charts also gives a good, so here we are looking at barcharts.com. So that's the URL, and I'll have it in the description, so don't worry about that. The description and the link should take you there. But what I wanted to show you here is, again, you can use this, and you can use whatever method, whatever service you can find to get you the best performing sectors in the market. So you can see that you just have to come to a website like this one. There are many websites that give you this. And again, you can see here, these are the leadership sectors. So you go within this sectors and find the best stocks. I would say stay roughly, you want to stay within the top 10 sectors. Why? go and own sector number 25, for example, here, when you have all this to look through. Your money deserves to be in the best sectors in the market. You don't have unlimited, even if you had unlimited capital, you always want to be in the best sectors. Now, the one thing I'm going to show you here is clearly you don't see again cyber. And why do I keep coming back to this thing? Is why you are looking for the best stocks, you are looking in actuality for the best theme. And this actually takes less time. It takes less time to find the best themes because there can't be that many, as opposed to finding the best single stock in the market. And so this is important. So whenever you're trying to find, whenever you're trading the market, and I'll conclude by going back to your question, which is a good one, the key to any returns in the market is the market trend. So the market is the key. And then the next thing to watch for is the theme. So this is second, number 2. Theme, or we can call it slash sector, but you want it to be the theme. So the sector. This is your second. So this is number 1. Your second consideration is the theme. And your third is the best stocks. So the best stocks within the best themes. If you can do this 1, 2, 3 process, owning stocks is going to be easy. At any given time, you should always know the best theme. At any given time, you should know what the market is trending like. What is the general climate? And your question, which was where I'm going to conclude, is do we consider the market when we are buying stocks? Absolutely. It is the most critical thing in the market. You will notice that your stocks are doing well when the market is trending higher, generally speaking. It's always been like that. The market sets the environment. It sets the psychology for traders. Traders are willing to bid stocks up when every other stock in the universe they are watching is moving higher. Nobody wants to buy stocks when stocks are tanking. People buy stocks, but they're a little bit scared. So the main consideration definitely has to be the market. Definitely. So right now, I want to show you why it is a good time to be considering long ideas. Yes, for now, this is where we are trading on the daily chart for the Dow. So we are trading in a range, but I think it's an okay market because number 1, we are trading above the 50-day moving average. We are also trading above this trend line. So if the market was to break this trend line here, a break of that trend line would suggest to me that we have to be cautious and not be looking to buy anything until we find a reason to go long. Okay, I hope that makes sense. Yesterday we had a big move in the Dow, about 230 points. Why? Because the market did find support on this line. And I made a point to subscribers that because the market had come back to show support there, we had to consider continuing to be long. Now, I want to show you something here, and it is the NASDAQ. Let's take a look at the NASDAQ. The NASDAQ monthly. Right now we are trading in a market where the NASDAQ has been trading above 69.10 since sometime in 2013. So it's been trading above 69.10 since then, and you can see that this has been a good market. Should one have been long during this period? Absolutely. Should one be long right now, even with the market down today slightly? Yes. Why? Because the market on one of the major averages, which is the NASDAQ, continues trading above 69.10. In fact, you can see here that for this month, the NASDAQ is pressing and doing its best to record fresh breakout on the monthly. So in this type of environment where, yes, as of right now for this day, we are looking at the markets a little bit unchanged. Here, okay, the Dow is down slightly, but from a broader picture, we can look to buy. In fact, some of the stocks that we are watching, like for example, this one here, which is one I talked about at the beginning of the video, long video. I thought it was going to be a 10-minute video, but oh boy. This stock, FYBR, all right there, you can see that, is breaking out today. FEYR is breaking out as we discussed earlier. So right there. Oh, you can see that. But anyway, it's breaking out. And the fact that it's breaking out means that if it holds above 44, let me check here on my list. If it can hold above 44.27, right now it's trading at 44.21. Even though the market is down, the general climate is not that bad yet. So we see the general market is slightly down on the Dow, but to be honest with you, this is still a good market. Why? Because the monthlies are okay. Now, I would like to conclude here because the video is already long. 1 minute won't kill us. At the time of going long, just like we had discussed earlier, at the moment of going long, you want to have the best entry price on the day. So this is Nasdaq daily. Nasdaq daily seems okay. Even though we can see it's coming off the highs, it's struggling. You have to put all these things into. So it's hit the previous daily closing highs here today. We seem to be coming off that high. So my question is, maybe now we are starting to show a threat of resistance on the top side. So if I was to buy something, I would be a little bit cautious, because if this is resistance short term, maybe what I buy right now could stall. So yes, you have to consider short-term time frames. If I go to the hourly, just want to show you what I am. So if I draw a straight line like that, I see the market could be stalling. If I take the recent highs like that, I can see that on the hourly, the market seems to be stalling on the hourly. What that does mean, that means is that if I buy something maybe at $44 in the case of FEYE, if I was to buy it right now, it's trading at 44.16. Maybe if this pullback in the Nasdaq is real, I could buy this stock at $43 lower, of a point lower. So I have to be careful. And the reason why I say that on the hourly, that this is the main recent high on the Nasdaq. It took place during this RSI breakout there. If I draw a straight line like that, I can see we seem to be struggling here. So to answer your question, at the moment of buying, do you consider the general market? Yes. If the general market looks like it could pull back, even pull back slightly, why buy the stocks now? Wait a couple of hours to buy the stocks. So what I'm saying here is that as of right now, this could be a problem. So if I was looking to buy something, I would say I'm gonna wait until I see the market clear this resistance first. I'm not gonna buy anything until the market clears resistance. Remember, the market is the key to everything that we trade. I would also look at the 5-minute chart to see what it looks like. So what I would say is, you see this recent breakout here, for example. Yesterday's spike in the market took place during this gap up here. So the spike in the market here took out this breakout. What I would do is probably draw a line from there, which is on the 5-minute chart here. If the market comes to this blue line and holds and starts pointing higher, I'll buy the stocks I want to buy at that point. Now we're going to cover this in the coming months, so don't worry. So I would use this 5-minute for indication of where to go along. I would also extend that line this way. This breakout line we discussed earlier, if the market comes here at some point and shows support, any bounce on this line with uniform activity, any bounce would suggest that the market has pulled back enough to where it wants to move higher. I would buy the stocks I am interested in at that point. I hope that makes sense. Now, I want to show you something else, not to confuse you. The ideal breakout is actually lower. It is here. This is the actual breakout because it connects this high, and there's a slight node right there. So that's the line. That's how I would draw it. So really, in truth, because I'm seeing resistance, potential resistance on the hourly chart, I would draw my line right there, and I would draw a simple line from here. Why is this important? Because this breakout here began this move here, and the market has been higher since. If the RSI comes back to this green line and shows support on a 5-minute chart, that tells me that this pullback in the market would have found some stability. The Nasdaq would be looking to start moving higher, and the stocks that I am looking to buy would also have seen short-term bottom. I will buy the stock during any bounce on this line here. So yes, at the time of buying, you want to go to the smaller time frames in the market first, and then in the stock second, to see whether you can get lower price points. It's a long video. I believe I addressed your questions. Otherwise, I thought the video was gonna be honestly, I thought it was gonna be 5 minutes, 10 minutes long. It's 51 minutes. What the heck? Let me add a small portion at the conclusion of this video here. We are looking at the markets here a little bit after I recorded what you've been watching the last couple of minutes, 50 minutes or so. I just want to add this little portion here because we are looking at the market having pulled back from where we were watching it earlier. And I have to note, it's interesting whenever you see this market come off the highs, but I want to show you why whenever, just before you make a purchase for any stock, you should consider market conditions, because you don't want to be stopped out. All right, first and foremost, let's go to the 5-minute chart for SPX. And earlier I talked about this breakout short term. It's not a breakout, it's just change in direction. The market did move here late Friday. Today is a Tuesday, and we've seen that now it has come back over the last couple of hours here to this support zone. So if the market is coming back to this level, that means that generally speaking, stocks that have pulled back should be bought. I hope that makes sense. So just before you buy, always try and understand where your markets are, and this is an art. Eventually it's simpler than it thinks. So the market did move above this buy point, which was here. It's been trading higher. Now it's made this high here. It's come back a little bit. You want to buy it after a short pullback, which is this support zone there. We know it's a good support because it is uniform activity. Now remember the stock that I just sent an alert after recording the 50-minute part of this video. It is from FEYE. I told subscribers that it is time to buy it around here because of this breakout. This breakout here gave this gap up at about 41 and 41 and change. So this gap began during this RSI breakout. You know the drill. So that was a good entry in price. The stock has been trading higher. So instead of buying it here at the highs of the day today, you can use this information to draw a straight line here. And you can see that we've bounced on this level once, which was this lows as of yesterday. Intraday, nice entry, and now we are looking at another potential intraday level. So from a timing perspective, yes, we are buying this on the monthly chart, but at the moment of purchase, the moment you want to buy, you want to give yourself a nice entry level intraday, which is here because of this uniformity support. That way, if you set a stop underneath that low of the day on the price and on the RSI, if the market ever comes back below that level, then definitely at that point you want to get stopped out if it comes here. So again, to answer your question, once you figure out, so this is FEYE, it's in the cyberspace community space or group of stocks, and this was the buy point here, and the buy point was at 44, so 44.27. And I think one can look at this as a buy even before the breakout. Why do you buy it before the breakout? Because of the surrounding factors. CYBR has already broken out. It's in the same group. Whoops. Right? We've already talked about that. CYBR has already broken out on the monthly. And if it's broken out on the monthly, then we can start trying to cheat a little bit by going along others that could look like they want to break out. The other one that has broken out is the ETF that tracks the sector. Oh man, my fat fingers today. Alright, this one has broken out on the weekly and on the monthly. And the other one is the leader in the group. So because the group is doing well, we can start finding others that are just about to break out, which is where we find FYEY here. So we can use this current price, get in there before the breakout, because you can see that if it breaks out there, that could lead to a nice move. So you don't have to wait for that breakout at 44.27. And I'm saying that if you use the 5-minute chart, the stock has come back to a logical place. So this entry here to a simple straight line, something like that, we've already seen support here as far as the stock is concerned. So on an intraday basis, what I'm getting at is you want to buy it here and then set a stop. So yes, after you figure your buy point on the weekly, your buy point on the monthly, your buy point on the daily, just before you buy, you might want to check the minute charts so you can know that you're not buying at a high level intraday. Want to show you one other thing on the monthly, because this is the highest monthly closing high. There's an argument that can be made that if we draw a straight line connecting this all-time monthly closing high and this all-time monthly closing high, and now that it is above that primary RSI line, the argument could also be that the stock is breaking out on a primary trend line. So it's already a buy. In fact, it was a buy somewhere here in the mid to higher 30s. This breakout here was moving above the primary trend line. Keep in mind, again, the reason why we are focusing on this sector, on this stock, is the potential for the RSI to make all-time highs, which is absolutely powerful, and the potential now for the MACDs, which are already trading perfectly because they are moving above zero for the first time ever, and also at all-time highs. Eric Mwathe, good luck. I leave you with FEYE from a timing perspective. If I was to buy this, I would look at intraday, that the S&P 500 has shown some stability, and the fact that the stock has come back to this intraday timing uniformity. So it's the same principle as my uniformity principles. If this holds and it's holding, I would look to buy the stock. Confirmation would be good if the stock can move back its 5-minute RSI above 50, confirming that it is jumped back above 50. Otherwise, it's trading at 43.40. I would be buying it here and put a stop of maybe 3% to maximum 8% stop to protect against any downside action. Again, this is Eric Mwathe. Good luck, peace, and blessings. I am out. Woo! ECS. Yeah.